Imagine owning a Bored Ape worth $300,000, and now imagine putting up that Bored Ape for sale and accidentally selling it for just $3,000. And this actually happened to a poor NFT investor by the name of Maxnuat when he accidentally listed it for sale for 0.75 Ethereum instead of 75 Ethereum. And this is just one type of NFT mistake that can cost you more than you think. So here's a look at 7 of the worst NFT mistakes to avoid. 1. Falling for FOMO. So the biggest mistake that most NFT investors make is buying because they fear that they are going to miss out on the next big thing. Therefore, they start investing in an NFT project without really knowing what they are buying. And this is dangerous since so many NFTs will not live up to their roadmap and will likely lose the support of their development team. And every time you buy into an NFT project, you should carefully consider why you think the NFT will have value to you in the future. And don't simply buy just because you think that this is your one and only chance to hit it big. 2. Always checking the price of an NFT. The second mistake is obsessing over the current value of your NFT. And if you find yourself refreshing the price of your NFT, then you will likely panic sell when the market drops. And let's face it, NFTs are a new investment asset. And like most new investment assets, there's going to be lots of volatility. Therefore, you need to relax and not worry when there's a 20% or 50% drop in the price. The best thing to do is only buy an NFT that you are willing to hold for at least 12 months no matter what. And this will make you more careful about which NFT that you're willing to purchase. 3. Buying knockoff NFTs. For every CryptoPunk, there is a CryptoPunk, a PicassoPunk, and a COVIDPunk. And yes, there are actually imitation NFT projects that are out there. Surprisingly, these knockoff NFT projects actually do have buyers. However, many people have unrealistic expectations about these projects. The problem is that there's no real passion behind the projects. The person or the team that is creating these knockoff NFT projects are just looking to cash in. Therefore, you shouldn't really be expecting their ambitious roadmaps to live up to the expectations. 4. Fat finger buying and selling. Earlier I talked about the NFT investor who sold his $300,000 Bored Ape for just $3,000, and this is more common than you might think. There have been cases where people have paid $3,000 for an NFT that was worth $300. Now, OpenSea have been trying to remedy this by putting up a warning notice if you attempt to buy an NFT way above the current market price, or if you try to sell your NFT way below the current floor price. However, the ultimate responsibility lies with you. Therefore, you need to be really careful when it comes to buying and selling your NFTs out there. Remember, you can't really undo a trade when you make it, so always double check before you make that trade. 5. Not doing research. Now this seems obvious, but so many people just hit the buy button without even doing any research. So always do your due diligence before buying into an NFT project. And remember that buying an NFT is not like buying a stock, right? There's no real barrier to entry for someone to offer an NFT. And that means that there are a lot of scam projects out there. Before purchasing an NFT, do your research, check out the team. If the team is anonymous, that's not necessarily a deal breaker. However, you should be cautious. Always do check out if the team has had any experience with previous projects. A team that has already launched a successful NFT project is worth watching. And also see if the NFT project has an active or growing community. Also make sure that you check the roadmap. And finally, use NFT websites like rarity.tools to learn the latest information about any NFT projects that you're considering as an investment. 6. Falling victim to scams. Now this is a big one because there are just so many out there, and one of the most common scams involves someone sending you a phishing email that says that your NFT or wallet is suspended and you need to take action to reactivate it. So people are then asked to connect their wallets, and at this point the victim will connect his wallet to the site and immediately have all his assets in the wallet, including NFTs and cryptocurrencies, stolen. So use a burner wallet when purchasing NFTs from a site that you are unfamiliar with. Also, never ever give out your wallet's key phrase to anyone. That phrase is only for you to know. Additionally, turn off DMs on Discord as well. That can help a lot. Most of the DMs that you will get are from scammers. And finally, never fill out any forms that ask for any personal information. 7. Having unrealistic expectations. The final mistake that NFT investors make is having unrealistic expectations. So there are so many people who have turned $1,000 into $1 million with NFTs, right? However, these investors were super early adopters, and the chance of getting a 1,000x return realistically is not gonna happen. It is getting slimmer and slimmer. Can you double your money with NFTs in 12 months? Absolutely, but is it likely? Maybe not. Be sure to have realistic expectations and take a long view perspective on your NFT investments. There are ways that you can flip NFTs and make a lot of money, but you need to be incredibly smart and strategic. So I recently made a video on the best NFT flipping strategy with under $1,000 for complete beginners that you can check out by clicking on the card on the screen. It's a huge misconception that you need a lot of money to make more money investing in NFTs. Alternatively, I made another video, 5 ways you can easily invest in the metaverse, another really important video. So whichever video you choose, I'll see you over there.